So today is 23rd of July 2015, Thursday. From the news, I saw that today the euro pairs moved up. Euro dollar, euro yen, euro Canadian, euro Aussie. I think the reason was because of the Greek government debt crisis vote from this news event. I think because the Greek crisis is abating, so I think hence euro is moving up. This could be the only reason why euro moved up today against its other counterparties. For pound, the retail sales came out today and it was negative for the pound. At minus 0.2%, it was less than the forecasted and less than the previous month. So this seemed to have hit pound. For example, in Financial Times there was news of sterling knocked by weak retail sales data. There was a drop of almost around 140 pips today. And this was against the dollar, and I saw similar falls against yen and Canadian and Aussie as well. The US unemployment claims numbers came out today, and this number is actually good for dollar, but US dollar didn't seem to have moved much today. This number apparently is the least in the last 40 years. The jobless claims in US fall to lowest level in 4 decades. So I took a look at this chart and it was the highest. It seems to be around the financial crisis in the autumn of 2008 and then beginning 2009. Then it went down. And regarding the Kiwi rate cut yesterday, I was wrong, because I thought if the rate cut was at 3% cut by 25 basis points, Kiwi would fall against dollar, but it didn't. Actually, it moved up against dollar. And because dollar didn't move much, it could only be explained by this official cash rate. Now if I go back some time, it seems like if there's not much difference between the number that came out and the forecast, there wouldn't be much movement in the currency as such. So logically this should really make the currency go down, but it didn't. So I guess sometimes it's hard to explain why if you try to pinpoint or find out one reason or one cause for the movement of the currency, sometimes it's difficult. Or this only makes me think of what Ed Seykota says, which is the fundamental news are really funny mental news. But having said that, Kiwi dollar is still in a downtrend, and I saw a news today on CNBC, I think by a lady from an asset management company, saying that there's still room for Kiwi dollar to fall down to around, so now it's at 65 cents for a dollar, so it could fall down to 62.60. That's what she said. And I think that's all from the news from today and yesterday. Tomorrow there is a lot of PMI numbers coming out, production manufacturing index numbers coming out from Euro countries. So I don't expect much movement tomorrow. Now I saw a couple of interesting news regarding emerging market currencies. For example, the Brazilian real has been falling down against the dollar, so now it seems to be trading around 3 point something Brazilian real for a dollar. I think there's a lot of issues around corruptions and economy not really good. I took a look at the Brazilian chart going back a few years, actually up to more than 10 years, and it says it has been the lowest in the last 12 years. And similarly for the Mexican peso as well, it seems to be falling down against the US dollar. So in general, the emerging market economies are suffering against the US dollar. And there was one interesting news about South African rand today. So it looks like the South African Reserve Bank lifted their rate to 6% by 25 basis points. So here we are. So it was at 5.75 and this time it moved up to, they lifted it to 6%. Now the explanation for this one is because the inflation is moving up in South Africa. So why I am showing this is a economic principle of the modern financial systems in almost all countries which are capitalist, which is if inflation goes up, the central bank should raise the interest rate to rein in the inflation, because inflation is caused by more money supply. So when the rate is raised, the money supply will reduce, and hence inflation of goods and stuff will go down. That's the rationale behind this interest rate rise. I think I took a look at the rise of the South African rand against the dollar. It's trading now at $12. So this is also one of the emerging market currencies, and as with other emerging market currencies, it's depreciating against the US dollar. Alright, now let's take a look at the charts. As we discussed, so euro currency pairs spiked up today against dollar, and if we look at euro yen, it's moving up. Looks like the euro crosses are beginning to form an uptrend. Euro Canadian is definitely on a proper uptrend now, in the daily and weekly. Euro Aussie as well, it's spiked up today. On the reverse side, the pound pairs fell down. For example, pound fell down today against dollar and against yen. Oh, this reminds me, there was an interview on Financial Times of a guy from Standard Bank, and he said that the Bank of England may raise the rate February next year, and he expects the federal US Fed to raise rate this September. So if the pound rate raise is coming up, I think pound will still appreciate. So this may be a temporary downturn. So pound Canadian is in proper uptrend, but in short term today it fell down. The same thing with pound Aussie as well, it fell down slightly. The other pairs didn't move much. Dollar, so for example in dollar yen, dollar didn't move much, and yen as such didn't move much. And same thing with Canadian as well. So dollar stagnant and Canadian didn't move much today as well. Kiwi, as we discussed, it bounced up to 20 EMA and it seems to be falling down now. So the rate cut, the expectation that the rate cut would make the Kiwi fell down didn't happen straight away, but we'll have to wait and watch in the next few days. Aussie dollar has been stagnant. And I think those are the important currency pairs. Now from the indices, I didn't see much movement or anything worthwhile to comment on. S&P fell down. This may be because of all the company reports coming out and results not very good. FTSE fell down. Well, today the fall in FTSE mirrored the fall in pound pairs. And the dollar index, I think it was stable as well. I took a look in the $100 index pair, which seems to be around 97, but today it fell down from yesterday. US oil has fallen down below 50. So this is the crude. So there was a news somewhere today which said the $50 was a psychological mark. So once it has crossed below 50, it could try to test the low it reached in March, which is around 42 pounds. If you go back I think 42 was the minimum. Even going back to 2008 December, $40 was the least. Brent similarly fall down. Crude and Brent obviously goes together. Gold is below 1100 as well, and it has been falling down. So I think commodities in general are in a bearish environment now. And that's it for today, and we'll come back tomorrow.